Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and a very good day to you. How are you, everyone? First of all, I would like to welcome you to Massive Open Online Courses, MOOC, IMU 600 Islamic Capital Market. So for today, we'll covering the first topic, which is overview of the financial system. All right. So please bear with me. I think that this sharing session will be around 20 to 30 minutes only. So this is the topic outline that we will cover. So the first one is the introduction to the conventional Islamic financial system, and then the overview of financial market, Islamic financial market in Malaysia, Islamic money market, and Islamic capital market as well. So before you understand what is Islamic capital market, we have to understand the basic concept of what is financial system, because capital market is one subset in the financial system. All right, later on we will see how it's been done. All right, so for introduction, what is financial system? So it is a collection of market, institution, law, regulation, and techniques that operate to enable the transfer of money from the surplus side or the savers to the deficit side or the borrowers. Okay, it's the efficient allocation of resource between savers and also borrower. So when we talk on the system itself, so we have all these participants. For example, we have the market itself. The market will be consist of the surplus, the people with the surplus fund, and also the borrower, people with the deficit. And then we also have the institution who run or govern these people, and then who govern this institution is, therefore we need a law and also regulation. That's why we have a Securities Commission for the regulator for capital market, and also we have Bank Negara Malaysia as a regulator for Islamic banking and also takaful. So let's move on to the next slide. So this is the overview of the financial system. Okay, as you can see here, we have in your left, we have the savers and also the lender, and the right side, we have the borrower. Okay, as for savers and lender, they are the one who are the surplus unit. They have extra money, okay, in their hand. Okay, for example, household, okay, firm, government, and also foreign institution as well. Okay, they all have a surplus fund. And also the other side, we have the borrower, the one who have a deficit fund. They lacking of money and they lack of fund, therefore they need a funding. So how the fund will flow? Firstly, we look on the savers or the lender or the surplus unit. Okay, the fund will go into the indirect finance, which is the financial intermediaries, is the bank and also credit institution toward the borrower, because the household, firm, government, and foreigner in the right side, they need the funding. Okay, they will go to the bank for the loan purpose, to make a loan purpose. All right. And also, as you can see in the below section, we have the financial market. Okay, in the financial market, we have the money market and also we have the capital market. So in this financial market, this is a direct finance where the savers and also the lenders will give their money, okay, to invest their money in the capital market or the money market. All right, and also the borrower can be the same person also. It can be household, it can be a firm, a government, and also a foreigner. For example, government need money because they are lack in funding. They will issue a sukuk or a bond toward a market. So the savers who have a surplus unit will subscribe the bond. Okay, it's different from the indirect finance. Okay, indirect finance, where the financial intermediaries is the bank and credit institution, where when the savers have extra money, they will go to the bank and make a deposit toward the institution, financial institution. So that's how banking institution make money. Okay, as simple as that. So this is the explanation. You can read and go through for this section. Okay, what I have explained earlier. Okay, so next we move to the function performed by the financial system. So we have a few functions here. We have 6 functions. The first is a saving function. Okay, financial market provide avenue for public saving. So we know that we can always save our money. Okay, not in our house, but we save our money in the banking sector or in any investment place. All right, and then we have wealth function. Okay, so the capital market provide excellent avenue to store wealth. So in capital market, the investor can accumulate their wealth. Okay, preserve the value of asset we hold until the fund needed or for spending. This use of fund is more productive than storing wealth in the form of tangible assets such as automobile or items that are subject to depreciation often carry a great risk of loss. So by using using the wealth function, we can reduce the risk of depreciation of our money and also our asset. And then we have a liquidity function. Okay, capital market provide converting financial instrument into cash with little risk of loss. Capital market provide liquidity for savers who hold financial instrument but are in need of cash. Okay, so this is the platform for liquidity. And then we have a credit function. So credit function provide liquidity and facilitating the flow of saving into investment to build wealth. Financial market furnish credit to finance consumption, investment, spending. Okay, so we use these facilities in banking sector. For example, we do home loan, we do home financing, we do make a loan to buy car. Okay, we do a financing to make a house renovation, we do a personal loan. So this is the credit function. And next one is a payment function. Okay, mechanism for making payment for the purchase of good and service, of course. Okay, in any buying and sell transaction, we're using this platform to do a payment function. All right, and the last one is risk protection function. Okay, financial market offer business, consumer, government protection against life, health, property, and income risk. Okay, accomplished by allowing participants to engage in both risk sharing and risk reduction approach. For example, we have insurance and also takaful, and also in capital market we have a hedging process. We have a derivative as well to protect from the risk. All right. Okay, next one, we move to the structure of financial market. So this is the very basic structure of financial market, where it can be identified based on the instrument itself. Okay, so instrument will be divided into two, which is the debt market or the equity market. So the debt market consists of a bond, suku, where it's provide you a fixed amount to be paid, and it's also provide you interest payment to the investor. And then we have an equity market. Okay, it consists of the stock, okay, shares, which is listed in Bursa Malaysia. And then we can also identify this financial market based on the issues of security. Okay, so security will be issued in the primary market and also secondary market. So primary market basically is a place where the first issuance of the share or the initial issuance of the instrument. For example, this would be the participant would be the banking sector who undergo the underwriting process of issuing a share, for example. So after they float their share in the primary market, okay, the share then will be transact in the secondary market, where the first issuance they need a liquidity. Okay, they need to sell their share. So the share which float in the primary market now turn to the secondary market. All right. Okay, so secondary market is the very vast and wide market where all the investor will be here. And then we have the third one, financial market will be based on the trading method on the secondary market, where secondary market can be classified into two, which is from the exchange market. For example, we have Bursa Malaysia, we have New York Stock Exchange, okay, and also we have over-the-counter market. Okay, sorry for the typo there. Okay, for exchange market, we can trade, okay, because it is centralized market. It is regulated by the Bursa Malaysia and also Securities Commission for Malaysia. However, over-the-counter is basically decentralized. It's not centralized. It is between the dealer. It is using electronic platform. Is it using the website, using the facsimile, fax, all right? And the last one, financial market can be identified based on the maturity. So it will divide into two, which is the money market and also capital market. So this one will go after this. Okay, so marketable financial instrument, this one have been mentioned earlier. Money market can be categorized by the time to maturity. Okay, so money market is for short-term debt security that are poor discount note, for example, banker acceptance, commercial paper, and treasury bill. However, capital market took longer for long-term debt and equity security with maturities greater than 1 year. Okay, for example, sukuk, debenture, common stock, and also preferred stock. Financial securities also categorized into two types, which is equity and also debt instrument. This one I have mentioned earlier. All right, the next one is overview of Islamic finance. So we have the conventional is very general. However, in Islamic capital market, okay, we hang on to the Islamic finance. Islamic finance is the whole concept of Islamic capital market. So Islamic finance broadly refer to the financial market transaction, operation, service that comply with Islamic rules, principle, philosophy, code of practice. The law and rules of religion require certain types of activities, risk, reward to either be prohibited or promoted. So based on the conventional, okay, we have the guideline from the Islamic side. So we have to ensure the product, the services, the instrument that are being used in the conventional, in order to be Islamic, they have to comply with this rule, principle, okay, Quran, Sunnah, Ijma, and all the advice from the Sharia Advisory Council in order to make it a Sharia compliant instrument. So basically, Islamic finance is a rule, principle, philosophy, code of practice. Law and rules of the religion require certain type of activities, risk or reward to be either be prohibited or promoted. Okay, to understand the whole concept of Islamic finance, so basically it's come from the religion of Islam and the component of Sharia, which can be, we divide into the Aqidah, fiqh, and akhlaq. So when we talk on Islamic finance, it's related to Sharia, and the subset of the Sharia is the fiqh itself. So this is where the discussion of any hukum or ruling been discussed here. And in fiqh itself, we divide into the ibadah, worship, which is worship is specifically to Allah Subhanahu wa Taala. For example, our salat, our fasting, our hajj. Okay, this is for ibadah. However, muamalah is more general, which is related to the human. Okay, where they go our life, where we have the economic, we have the family law, we have commercial law, politics, and others. So of course, Islamic finance will be located in the economic sector. All right. Okay, so this is Islamic financial market in Malaysia. Basically, this is the very general concept that you have to understand, because financial market in Malaysia is can be divided into two, as you can see here. Islamic banking, takaful, and also Islamic capital market. Okay, it should be divided into two because we have a different regulator that regulate both of this sector. Okay, we look on the first one, Islamic banking and takaful. We have banking and financial product such as deposit, wealth product, money market product, financing product, and also trade financing. Okay, for example, you make a home financing, you make a car financing, so this will be in Islamic banking and financial product. And also include in this sector is takaful investment. So anything related to takaful insurance will be referred to this sector. And the platform will be used is Islamic interbank money market. However, in the right side, we have Islamic capital market. So this is all the instrument divided into the equity, sukuk, and also derivative. Okay, for example, we have Islamic unit trust, REIT, ETF, venture capital, and for sukuk we have asset-backed, asset-based, and also for derivative we have crude palm oil futures, single stock futures. All right. So the platform for Islamic capital market will be Bursa Malaysia and also over the counter actually. So who is the intermediaries? Okay, I think that's all the intermediaries will need each other actually. Islamic bank and takaful needs capital market, investment bank. Okay, is the participant for capital market. They issue a securities, they issue a bond. So any government or any institution want to issue a sukuk will be based on the investment bank. Okay, because investment bank will do the underwriting process. And then we have Islamic stockbroking services, Islamic fund management, unit trust management company. For example, we have Kenanga investment, we have a public mutual, so they are all fund manager in Malaysia. So for regulator, Islamic banking and takaful will be governed by the Bank Negara Malaysia, including takaful. However, for Islamic capital market will be governed by the Securities Commission Malaysia. All right. So this is the very basic concept for financial market in Malaysia. I think that you have to remember this. Okay. Okay, next we move to the Islamic capital market. So the Islamic capital market, Islamic money market, okay, it can be defined as financial market for wholesale short-term fund transaction. Okay, it's provide you short-term, okay, during 1 year. All right, the duration of money market transaction range from overnight to 12 months. All right, 1 overnight to 12 months, with 3 months or fewer during being the most typical. In many countries, the transaction in the primary and secondary money market take place over the counter by electronic transmission, but some take place in the exchange, such as Malaysia, Bursa Suq Asila. So Bursa Suq Asila is one place in the Bursa Malaysia where the transaction of the commodity happen there. So what is the function? Islamic capital market is for liquidity management. Okay, for bank institution to acquire a loan or financing when there are lack of funding. Okay, so we have bank with surplus money will lend their money, give their financing to the other bank who have a deficit. Okay, so this is for liquidity management. And then it is for avenue for secondary trading of money market instrument. Also, Islamic money market provide a trading platform for you to trade also. And then the last one is the channel for the central bank to conduct its monetary policy. So central bank also will give will provide their central bank will provide a short-term financing to the banking institution that are in the deficit situation. Okay. So this is all the money market participant. We have a commercial bank, we have governmental entities, central bank, we have a corporation, finance company, pension fund, insurance, broker, dealer, money market, mutual fund, and also retail investor or individual. And this one is the instrument. Malaysian Islamic money market comprised to two components where we can divide into Islamic interbank money market and also trading of Islamic money market instrument. So this is all the instrument that been used in this component. So for Islamic interbank market, we have Mudarabah interbank investment, commodity murabahah, and wakalah investment. For trading for Islamic money market, we have government investment issue, Malaysia Islamic Treasury Bill, Bank Negara Monetary Note, Sukuk Bank Negara Malaysia Ijarah, Islamic negotiable instrument, and sell and buyback agreement. Okay, next we move to the Islamic capital market. So far, okay, so far so good, guys. How are you? Hope you are doing good. Still, you are still with me. Okay, now we are moving to Islamic capital market. So this ICM therefore be defined as a market where the capital market transaction, operation, activity are carried out according to Sharia principle and requirement. Okay, Islamic has been added to the term capital market to emphasize the fact transaction within such a market must be free from the involvement of prohibited activities in Islam. So it's quite similar to the conventional. However, we have a regulation for Islamic capital market because Islamic capital market provide you a platform that all the instrument that being used is a Sharia compliant instrument only. All right. So that's why it must be according to the Sharia principle. So what is the key feature for capital market? You can just refer to the red wording. For example, it is an organized market, okay, such that the transaction are performed according to the certain principle, norm, rules known accepted by the market participant. The market is sense regulated, okay, so it's ensure free competition and fair play in the transaction undertaken. We don't want any problem from the market. For example, we have money laundering, bribery, so that's why it must be regulated. So this is the vehicle used for capital circulation in the capital market is represented by the security in the form both and debt equity, which are characterized by the negotiability of price and immediate transferability with a very low transaction cost. Okay, so capital market is the where medium to long-term securities. For short-term, it will refer to the money market. And these securities represent financial claims which are issued by firm requiring financing and held by retail and institutional investor. Okay, the main function, objective ICM and conventional are same. Provide platform for demanders and suppliers of funds to trade in financial instrument as a means of raising large amount of financing or for long-term investment. So for this definition or this function, you can always refer back to the first slide that I have shared to you regarding the surplus unit and also the deficit unit. For this category ICM, we have a deficit unit. For example, we have the government, they need a funding to do a hospital, they need a funding to do a highway, for example. So they will enter to the ICM and issue a bond or sukuk. Then we have a company that have extra money, they make a very lot profit. So they will subscribe to the government bond, for example. By that, the demanders and also the supplier will meet and they can get what their objective. For example, the company, they want a profit, and at the same time, government get their funding. And ICM is requiring additional rules, regulation to be set by a regulator for Sharia compliant securities. And we have extra precautions because in ICM we have a Sharia Advisory Council in SAC to conduct this Sharia compliant part. Okay, so this is the summary of the key role of ICM intermediaries between demanders and supply of fund. As I give example just now, play a complementary role to the Islamic banking and takaful sector, because Islamic banking and takaful sector, they also they are in the surplus surplus fund where they need an avenue to do investment. All right, and provide opportunities for diversification of risk. For example, we have a very multiple choice of instrument that we have. For example, we have REIT, ETF, we have derivative. So this all can be diversified to mitigate risk. And then facilitate the available of liquidity by enabling secondary trading of security. Okay, we have the secondary, for example, we can trade, we can buy, we can sell our stock, okay, in the Bursa Malaysia. By that will guarantee the liquidity to be happen. Make available various financial service. So for ICM to be established is not solely depend on the instrument itself. We need a lawyer to make agreement. We need a trustee to ensure the right of the investor right of investor akan terjaga, will be protected. And then we have many various financial service other than the instrument itself. Okay, so it will have it will increase, okay, it will increase okay, it will increase the growth of the financial market as well. And the last one is the contribute to the economic growth. Okay, of course, the ICM with all the instrument that we have, okay, will support the economic growth of the nation. Okay, this is the prohibited element in the Islamic capital market. We have interest, riba. All right, this is all that must be prohibited, okay, in all the transaction, in all the instrument. For example, riba, we have riba in riba al-buyu', riba ad-dain, riba al-qard. So this is all types of riba should be eliminated from the transaction. Gambling, maisir, okay, unethical practice such as manipulation, ihtikar, kenaj, artificial price hiking, tadlis, concealment of a defect. Okay, and then we have a gharar, uncertainty that we don't know. Okay, what is the price? What is the specification of the asset? So it must be clear, crystal clear, so that we can avoid gharar. And then speculation. So the last one is a prohibited haram element deemed non-permissible according to the Sharia. For example, when we evaluate Sharia compliant to the company, either the company is Sharia compliant or not. Okay, all these prohibited elements should not be have in the company. For example, the company shouldn't have any interest-bearing debt, shouldn't place their deposit into the conventional bank. They don't do any business that contradict to the Sharia. For example, liquor, pork, tobacco. Okay, they have prohibit all the element of haram. Okay, what is the key difference between conventional and also ICM? Okay, the difference relate to the business activity. Sharia compliant is priority for both debt and equity market transaction. The use of proceeds raised through the ICM, which have to be invest in the Sharia acceptable activities. Okay, the broader market exposure enjoyed by Islamic capital transaction, which include both conventional and Islamic investor. And the type of structure acceptable for ICM transaction. And the last one, the asset requirement for ICM transaction. So what is the growth driver for the Islamic capital market? Because we need Islamic capital market to be robust, we need Islamic capital market to be growth more. So what is the driver for that? Okay, the first one is the role played by the Islamic financial institution, mainly Islamic bank and takaful operator, okay, which act as both issuer and subscriber in the beginning of ICM sector. So this is quite similar for the key role of ICM, where Islamic banking and takaful sector, they play a role in as a participant in the capital market. And the growing high quality liquidity management instrument create a demand for both and short-term, long-term funding facilities. The third one, the increasing preference for Sharia compliant investment create growing demand for ICM product and services. Okay, as we can see that not in Malaysia, not in Arab country, also not in the Middle East, but Islamic capital market, Islamic finance is growing in the Europe country as well. So we have a very wide investor base and very high demand for Islamic capital market. And the last one, the rising demand for the infrastructure financing. So by the akad that we have, for example, we have by Tawaruk, we have by INA, we have Musyarakah Mutanaqisa, Ijara, all these offer opportunity, okay, to collaborate or to cooperate with the infrastructure financing. So we have these specialties in Islamic finance where we have all these akad, we have all this contract that can facilitate, okay, the government or the company or the one who want to operate the infrastructure financing. All right. So for this capital market, we have the regulator that manage and govern this sector, which is the Securities Commission Malaysia, or SC. Okay, so SC is self-funding statutory body with investigate enforcement power established on the 1st March 1993 under Securities Commission Act 1993. Okay, the report to the Ministry of Finance and its account are nominated in Parliament annually. And the main function for SC are to promote development of capital market and to streamline the regulation of the securities market. You can see the function of SC is to give education on the investment to all the society, and they also provide a guideline. They also provide a act, okay, to give a guideline to the institution in order for them to run a instrument or any transaction. All right. So I think that's all for now. So in this chapter, you have learned about the introduction, conventional Islamic financial system, financial market, Islamic financial market in Malaysia, Islamic money market, and Islamic capital market. So we meet you again. Okay, we'll meet you again in the next session in the next topic, inshallah. So thank you for your attention and see you again in the next time. Okay, Assalamualaikum warahmatullahi wabarakatuh.